Hello, good morning, everyone. Sorry for the short delay. We've had some technical issues going live on this YouTube channel. Thank you very much for joining. My name is Edward James, Head of Content and Research at MEED Global Data. And I'm joined here by Colin Foreman, the MEED editor. Thanks for joining today.
Thank you,
Colin.
Hello, everyone.
Yeah, this is the latest MEED briefing on the Iran conflict. It's our sixth session, I believe. I can't believe how fast time has flown since the start of the conflict on the 28th of February. I think we're now 6-7 weeks on. We had a fairly quiet April with the ceasefire. But this week, of course, here in the UAE at least, situation has deteriorated a little with some warnings and alarms from the government, but also we saw some attacks, some missiles and drones in the UAE. So certainly something that has heated up quite considerably. So as ever, if you have any questions for Colin and me at the end of the presentation, please put them into the comment box and you'll be able to see the questions. Okay, so as you can see, we've had some technical problems. Here we are, we're now live. So on the right-hand side, you can see the chat box. Please, if you do have any questions for me or Colin, we can see them here. Put them into the comment box and we'll do our best to answer them. So we're just waiting for everyone to click on the new link and join, and then we will be able to start. So difficult week, Colin.
Yes, I mean, as we were saying off air before we started, you know, we've done 6 of these conflict briefings now, and each time we go to do one, we think, is there anything new that we need to talk about? And at the beginning of this week, we had our usual morning call to discuss what we talk about, and lots of things happened on the Monday, which meant there's a lot of updates to talk about and cover, which we'll be doing once we get into the slides. But yeah, it's a very dynamic, ever-moving situation with lots of massive implications for the short-term and long-term outlooks.
Yeah, it certainly is, and of course, also very difficult to have a clear picture, isn't it, and to understand what's happening and what the outlook is and what will happen next.
Yeah, I mean, I think as is often the case when there's massive shocks to the economy, it's very difficult to know what's happening without live data. If I think back to, say, 2008, when there was the global financial crisis, I can remember there was probably a 3-month period where we didn't really know what was going on while we were waiting for economic data to come through. There was a lot of anecdotal commentary, a lot of people saying about things going on in the marketplace, but you didn't really see the full impact until that economic data came through. And I think with this one, given that it started at the end of February, the first quarter data is a bit misleading, given that you had 2 good months and then another month that we're not sure about. Second quarter, again, challenging, but it's probably not going to be until the end of the third quarter that we get a full idea of what the economic impact is. So it really shows that lag that you have with data and the sort of economic shocks.
That's right. Yes, without the data, it's very hard to reach firm conclusions and understand that the full impact. You're then dependent on anecdotal data and what people are saying, or what you're seeing, or even going with your gut instinct rather than having the full picture and facts. But data is coming through gradually, and we'll be highlighting some of that data in the presentation today. Talking of which, if you are interested in a copy of the presentation we'll be giving, then at the end of this this presentation, there will be a link for you to be able to click on to be able to download it. Okay, so again, apologies for the technical issues. Using the sort of YouTube live link page. Doing anything live is always complex and prone to some challenges occasionally, but we are now online and ready to commence. So as ever, just again a reminder, please put in any questions you have into the chat box or comment box on the right hand side of the YouTube page, and we'll do our best to try and answer the questions that you might have at the end. Right, okay, so let's move on to the presentation itself. And Colin, over to you for a roundup of what's happened in what's been a quite tumultuous few days.
Yeah, so I mean, it's been quite a dynamic week. At the beginning of the week, there was the US-backed operation Project Freedom, which really involved guiding ships with the US Navy through the Strait of Hormuz to allow oil exports out through from the Gulf. This is obviously something which has been a major pain point for the global economy. So much oil is produced in the Gulf and not being able to get to international markets. And that's something which the US is and the global economy is very sensitive to. And we've seen that in the sort of rise in oil prices that we've had over the last couple of months. So in an attempt to alleviate that stress, that the US have started this Project Freedom. Then a pretty busy Monday in terms of news. There was a couple of vessels which were attacked, including a vessel which is operated by ADNOC Logistics and Services, which was hit by 2 drones in waters off the UAE and Oman. And then at around 5 p.m. UAE time, something which in the UAE we haven't really had for almost a month was alerts coming through on phones. And certainly in Dubai, I believe also in Abu Dhabi, that was the case. But then at around 6 p.m., there was reports of an attack in Fujairah as well. The other cruise missiles and ballistic missiles that were reportedly intercepted over the sea, but the only confirmed damage that's reported was at the Fujairah oil industry zone, which is on the east coast of the UAE, which they said resulted from a drone attack originating from Iran. So that was quite a hectic start to the week. And then just to follow up on that, the 5th of May, the UAE authorities put out a statement saying that they were engaging with more attacks from Iran. So that's a significant change compared to what's been the case for almost a month, with the ceasefire in place and no alerts or attacks being directed at the UAE. So that was Monday and the Tuesday, but then overnight, so Tuesday in the US, some important statements. So just to start there, the main thing there is Trump announcing a pause to Project Freedom. That's basically saying he's saying that that's a request of Pakistan, and he's saying that negotiations with Iran are progressing, and there's hopefully a complete and final agreement in the offing. So that's something positive if you take that statement at face value. Additionally, comments that were made before President Trump's comments were Secretary of State Marco Rubio saying that Operation Epic Fury has come to an end and its goals were met. I think different people will have different views on whether the goals have been met, but you can see there's an American move there to try and move away from the conflict and try and get a negotiated agreement with Iran. But like all negotiations, it takes 2 parties to come to a deal. And I think at the moment, the pressing issue, as we've seen at the very beginning of the week, with the attacks on the UAE and shipping, is getting that oil flowing out of the Strait of Hormuz. So that seems to be the main focus at the moment. So a busy start to the week, and we're still only at Wednesday morning.
Yes, let's hope the second half of the week is a bit quieter than the first.
I think just to build on what's happened this week, we just need to take a little bit of a step back and just remind ourselves of why the things that we've been talking about are so important. So the attack on Fujairah, normally we don't talk about Fujairah too much at MEED. It's one of the smaller of the 7 emirates. However, it is strategically important. So we have reported quite a lot over the last 10, 15 years on pipelines, bunkering, oil storage facilities in Fujairah, and more recently on a rail connection and new roads being connecting up to Fujairah, which reflects its strategic importance. Other things we've reported on are the power and water facilities on the east coast, where the sea is cooler and deeper. And of course, there are some tourism developments there as well. But really, just this last month, 2 months, the strategic importance of Fujairah has been underlined even more. Just that those of you that aren't familiar with the geography, Fujairah sits outside of the Strait of Hormuz on the Gulf of Oman. And that means a lot of what's coming into the UAE at the moment, and also the oil which is being exported, is coming out from Fujairah. So in terms of strategic importance, it's really significant at the moment. And we've had some commentary from UAE officials just explaining how important that's become. So if we see there, the capacities increased 20-fold and daily truck movements have risen by 30-fold. And speaking to people that are engaged in projects there, there's a significant uptick in traffic, as you would expect, with 30-fold increase in truck movements. So Fujairah really has become arguably the focus of attention for the UAE over the last couple of months with that closure of the Strait of Hormuz. So that's why Fujairah is important.
And I suspect it's going to be going to see a lot more investment over the years to come.
Well, actually, it's good that you mentioned that, Ed. The statement that came out from the UAE government on the 30th of April, where that data comes from, they did talk about ongoing and future investment into Fujairah. That not really clear on what level that investment's going to be like, but I think at a minimum, it's going to be to make sure that the facilities on the East Coast are capable of supporting the UAE in an emergency situation, and possibly even bigger than that, and putting some major port facilities that would be used full time on that coast. And then on top of that, supporting infrastructure as well, which will connect it to the main centres of population, which still sit on the Gulf Coast.
Of course, today they also announced the award of a new desalination plant in Fujairah too, which again I assume makes more strategic sense to have a desalination facility, deep power facility, or utility generally outside of that strait.
Yeah, the interesting thing, if you look at the maps, is there's limited space on that coastline. The geography is very different. You don't have a lot of flat land to develop. So space is a premium, but very important location. I think the other thing just to highlight, which I'm sure everybody is aware, is how important oil is, but also how much of an impact this closure of the Strait of Hormuz has had on the region. If we look at, there's a story we reported at the beginning of the week, and that's Kuwait with almost zero crude exports. There's a possibility that some oil has been exported via pipelines through other countries, but in terms of maritime exports, it's at zero, which is a huge blow to the Kuwaiti economy, the first time since the Gulf War in 1991. So we're really seeing there how important this Strait of Hormuz is for the Gulf. We talk a lot, if you watch the international news, it's very much about price at the pump in Europe or the US, but for us in the Gulf, and for particularly Kuwait, Qatar, and Bahrain, which don't have a coastline sitting outside of the Strait of Hormuz, it's a real economic problem.
And I think we've said before that one of the sectors that will grow, or some of the projects that will emerge from this, I'm sure, export oil and gas export pipelines, or projects associated with finding alternative means of exporting oil and gas from Kuwait, Bahrain, Iraq, and Qatar, so that this situation or that can't happen again.
Yeah, there's some very interesting stuff online, actually, some sort of academic papers that have been released, which are talking about exactly what you're discussing. So there's things like pipelines that are running down from Kuwait down the eastern side of the Arabian Peninsula, and then interestingly coming out through Duqm.
Through Duqm, yeah, where of course Kuwait has an investment in the Duqm refinery.
Yeah. And again, there's some calculations there on the cost of these pipeline projects, and I mean it's a large amount of money. But if we look at sort of historical project spend in the region, it's not It's not insurmountable.
No, certainly, and far less than the amount of money that you will lose if you can't export your oil or gas at all.
Yeah, and I mean, during better times, we've spent a lot of time commentating on projects which are looking to do things that may produce a revenue in the future, particularly some of those sort of real estate tourism focused projects that have been launched certainly since sort of 2020. I think these projects have a definite ROI and are absolutely crucial for the future of the region.
Absolutely. And of course, but building oil pipelines, oil and gas export pipelines, is not, from a geopolitical perspective, not always been that easy. Kuwait has tried to build an export pipeline before, and through Saudi waters, and Saudi denied access to its waters for the pipeline. Obviously, we know about the troubles 20 years ago or so with Qatar trying to build a gas pipeline through to the UAE, the Dolphin pipeline. So it's, there is a political aspect to these issues as well.
They're fascinating stories, aren't they? They're A, sort of a construction project, but B, they're something that's drawing lines across maps and across borders, which requires a lot of political will.
Yeah. So here we got just the contract awards on the last 10 years or so. Just to put into context the situation today, very quickly, the last 3 years have seen a boom in projects activity in the region, reaching a record high of about $313 billion in 2024. This declined, but still a very impressive $231 billion in 2025, which is far higher than, as you can see, the average between 2016 and 2022. So until the conflict started in late February, the region was going through a very healthy period of explosive project growth, construction contracts, oil and gas awards, and so on. And so that sets the scene for looking at the data this year and how the market has been impacted. So it's a bit of a mixed picture. And as you can see in the graph on the left-hand side, the market started very well in January and February. February seeing some $28.5 billion worth of contracts awarded, and some 110 contracts, individual contracts above $10 million. Now this number fell, as you might expect, to about $16.7 billion in March. That when there were 68 individual contracts. And the number's fallen further in April to $9.1 billion, according to the MEED projects database of all tracked projects in the region. And that's from 82 awarded projects. So actually an increase in the number of projects, but a decline in the total value of those contracts. Now, it's interesting in two ways. One, yes, you can see that the project activity in terms of volume and value is down. However, on the flip side, you can also see that activity is continuing. One might easily assume that all projects awards would stop, or there'd be zero, but actually these numbers have contracts are still being awarded, projects are still proceeding, and that's also interesting in itself. So it depends on how you read that situation. Now, of course, the numbers retrospectively tend to rise. So that April number will increase as more projects and contracts are identified. Of course, we should also bear in mind that in March it was Eid and Ramadan, so that would also impact the numbers, one would assume, as well. On the right-hand side, you can see that the UAE is comprising 50% plus of all the contracts awarded this year, followed by Saudi Arabia, and then Qatar, Oman, Kuwait, and Bahrain. And that's following on from the 2025 numbers, where UAE was once again the largest projects market in the region, followed close behind by Saudi Arabia. Colin, what do you see when you see those numbers there?
I see two things really. I see that the decline is something that I would have expected. We try to say things are continuing as normal, but obviously a conflict has an impact on final investment decisions and sign off on contracts. So that's something I would have expected. I think possibly the thing that is perhaps most noteworthy is the UAE, which has been on the receiving end of most of the attacks from Iran, remains the largest projects market. Logically, you would have thought that maybe markets that are sitting further away, so for example, the west coast of Saudi Arabia would have been more active and accounted for a greater percentage of the contract awards. So I think perhaps the UAE accounting for over half of the awards is the thing that stands out for me. I wouldn't have predicted that.
That's right. UAE is hardest hit in terms of number of missiles and drone attacks, even more than those launched on Israel, I believe. So the fact that it's performed so well in March, as you can see here, I guess shows the market's resilience in the face of this.
I mean, we were just speaking with a colleague this morning, weren't we, who's just visited today, and he was commenting on
Okay. Apologies, we've got some technical issues, as you can probably tell. Just trying to share the screen here. Okay, I believe it should be working now. I think we've an issue of Murphy's laws springing up here. There we are. Okay, we're back. Okay. There we are. Okay. So we can see here from the slides, hopefully you can all see them. Actually looking at the YouTube video, let's have a look. Just waiting for the YouTube to update. There is a bit of a lag. Okay.
I think we continue. There's a lag.
Yeah. Okay. So hopefully you can see the graph in front of you. There is, we can see it quite interesting that UAE really did very well in March, but actually fell in April, which is fairly interesting. And then you can see Saudi Arabia had a fairly disappointing March, but actually improved in April. So as did Kuwait. So it's difficult to come to a conclusion with the data that we see here.
In terms of historicals, Ed, I mean, we've been fortunate the last 3-4 years to have record levels of contract awards. How do the levels that we've seen in March and April compare to, say, 2019, the sort of pre-COVID 2018, 2019 era?
Yeah, well, I mean, the interesting thing here is we've had in the first 4 months $75 billion.
Yeah.
If we go back to 2022, the whole year was $120 billion.
Yeah.
So and in COVID era it was 70 billion. So you know, that even though we as you can see, some numbers are up and down, still in a very positive period, lots of projects proceeding. And
yeah, I mean, I think we'll talk a little bit about real estate in going forward, but I think that's one of the factors that you need to remember with this is that we're coming in from a very high base, aren't we? So any correction, you feel it quite a lot coming from such a high base.
Yeah. Okay, so hopefully some of these technical challenges will be resolved, and you should be able to start seeing some of the slides now. So this graph here is interesting because obviously you're looking at the outlook for the year ahead. What I did, I took from MEED projects the top contracts, individual contracts, which are actually under bid evaluation. So that's where bids have been submitted and awards are due any time now, effectively. And you can see more than $200 billion of contracts out in the market where the clients are evaluating them and are due to award them over the next month, 3, 4, 5 months or so. Give you a very good indicator, short-term indicator of what's going to happen next and the value or quantum of that. And you can see there's some very interesting deals. Now, not all of those will go ahead inevitably. And of course, there are always rumors going around about this project being delayed or whatnot. But you can see several of them here. We can be fairly confident about proceeding. Metro Line 7, for example, in Riyadh. We hear that the Dubai Strategic Sewerage Tunnel contracts, PPP project, are due to be awarded as soon as this week, potentially. A range of other contracts. I know there's some question marks about the airport right now, and I see a comment already in the comment box about some delays on the Maktoum airport. But when you look at this list, Colin, do you see anything here that you feel is worthy of comment?
I think my working hypothesis at the moment, which is very much a work in progress, is that we're seeing emphasis in terms of comments from senior leadership in terms of obviously remaining a prime energy exporter is going to be crucially important. So oil production is going to obviously remain a key priority, and any damage that's been done there is going to have to be repaired. I think Dubai has been the most active in terms of talking about future projects and work on ongoing projects. At the moment, those announcements seem to be centered on projects that are local. So I think there's maybe a case of control what you can control, and you can control the local domestic market a lot better than the international one at the moment. So I think some of those ones with a more local infrastructure, improving things locally, seem to be the priority at the moment. And you know, I think there's been a criticism level that there has been a bit of an infrastructure gap. Some of that infrastructure, particularly when it comes to transportation and also with drainage, needs to catch up. So maybe this is an opportunity for some of those things to catch up a little bit. But that's very much me reading commentary at the moment rather than a stated policy.
Yes, certainly. Back to basics in terms of infrastructure has been a theme over the last year or so, with a lot of plans for road contracts, airport expansions, metros, railways, and so on.
I mean, it's incredibly difficult to try and get on top of a congestion problem when you have a city that's growing rapidly. If you have a situation where some of that steam comes out of the economy, it's an opportunity to get ahead on the infrastructure side. And I think that's what we're seeing. We've seen 2 big announcements on Metro, one of them with the Gold Line and the other one with just progress on the Blue Line and the 4th Federal Highway. So we're seeing some of those things being addressed, and it's probably not the opportunity you would have asked for, but at the same time, it is an opportunity to try and get ahead of some of those infrastructure problems.
And it's not just Dubai, of course. Riyadh is very active in road building right now. Some big contracts from the Royal Commission for Riyadh, and we have the King Salman International Airport in the market. As we know, the Riyadh Metro Line 7, the Q Express too, moving ahead. So it's not just Dubai.
Yeah, I mean, arguably the biggest thing that's happened in Riyadh over the last 3 years is the opening of Riyadh Metro, and just the impact that that's had on the city. So yes, I think for sure there's going to be more work there.
Just a reminder of everyone watching today, there's a poll question. If you can answer the poll question, I'll The more votes we have for it, the better, because in a minute I'll show you why. They're going to do it's a comparative poll, which we've done twice already. So if you do have the opportunity, there's a poll question at the top of the comment box. If you can answer that, that would be very helpful. And also, if you have any questions for me or Colin at the end of this presentation, we will try to answer your questions. Okay. Oh, here we are. Here's the first poll question. The poll is, how badly to date has your company been impacted by the Iran conflict, if at all? 4 answers. 1, it hasn't impacted us and it won't. 2, it hasn't impacted us yet, but it will. 3, quite badly. And 4, very badly. Now, the reason I'm encouraging you all to take this poll is because this is one that we have done already before twice, once on the 31st of March and once on the 16th of April. And we want to see how your answers change over time. So the more responses we get, the better to be able to judge that. I can see we've got 100 responses to that poll. So we have 43% say it hasn't impacted us, but we think it will. 11% saying it hasn't impacted us and it won't. Okay, that's interesting because that number's gone up. So that's 53% of you are saying that your company hasn't yet been impacted by the conflict. On the other hand, 35% of you say you've been impacted quite badly, and 12% of you are saying that you've been impacted very badly. Now, these are the results of the same question with the same answers on the 31st of March and the second time on the 16th of April. So we can do a direct comparison of the same question and the same responses. So what we can see here is that in March, end of March, 63% of you said you hadn't been impacted, but you expected it will. And 6% of you said you hadn't been impacted, and you don't expect it to. So that's 69% total said you weren't impacted by the conflict. That number has now declined to 42% and 12% respectively, so 54%. So the number of you reporting that you haven't been impacted is declined over time. On the other hand, 24% in the end of March said you were affected quite badly. That grew to 35% in mid-April and is sticking at 35% currently on the 6th of May. And then the number of you very badly impacted that actually declined from mid-April from 17% to 12% today. So I think more and more companies are being impacted. But what's interesting, I believe, is that more than half of you say your company hasn't been impacted by the Iran conflict, which I think is very telling. Now, 42% of you saying you haven't been impacted yet. So you do expect it to happen. But Colin, any thoughts on that?
I think a lot of it's to do with supply chains, isn't it? I think the big fear, particularly in the project space, is the impact on projects with supply chains, and that's something which, the longer this Strait of Hormuz problem continues, the more and more that becomes an issue. I mean, we're lucky in the sense that the region's quite self-sufficient for basic materials, but not completely immune to supply chain shock. And I think that's really where the issue's lying for a lot of businesses. Yes, there's concerns about safety. Yes, there's concerns on some of the geopolitical implications in the long term. But I think that the real world, crunch will be on the supply chain.
Mm-hmm. Yes. So again, without data, it's always very difficult to be able to know what's happening. And it's clear that a lot of us are thinking that the worst is still to come. Some respects. Now, couldn't do this session without commenting on something that's very important, which happened to the UAE last week, and that is it announcing that from the 1st of April it was leaving OPEC. Now, a very major announcement, very major decision, had a lot of people talking and commenting about this. And the essentially it now means that UAE is no longer confined by or constrained by OPEC quotas. So it was previously restricted to about 3.4 million barrels a day of oil exports, but now can export as much oil as it wants to or sees fit. And with its stated intention of being able to produce 5 million barrels a day and export that by 2027. So that is could potentially see those exports rise by half. And if it was able to produce 5 million barrels a day, then that's equivalent to about 40 to 50 billion dollars a year in additional revenue if oil was at $70 a barrel, of course. So a big potential economic boost for the nation if it's able to achieve that, and if oil prices stay high. What do you make of that, Colin?
Yeah, I think the decision is not something that took us completely by surprise. The UAE's frustration with OPEC and its not being able to increase its output as much as it would want is something that's been talked about for a number of years. So I think the decision itself is not something which was particularly surprising. I think the more interesting conversations have come around the timing. So the energy minister gave an interview. He was saying that the timing. He explained the timing basically in terms of being able to not have an impact on the price. That then means you're less likely to have retaliation from some of the OPEC members if there was some sort of tit for tat production war going on. So it was an opportune time in terms of things, given the stress that the oil market's in at the moment, to avoid some of those problems that you would have coming along normally. There's also been a lot of talk about a political dimension to the decision. I think we've seen that the UAE is becoming frustrated with some of the regional organisations, and there's been comments from government officials on various regional institutions, and including the GCC. So I think what we're seeing here is something which in some ways has been happening in a quieter way over the last few years, is but more of a sort of a UAE first policy. I think the UAE's found that some of the organisations that it's part of aren't really serving its best interests, and I think it's being a little bit more assertive in how it conducts its international relations going forward.
Yeah, absolutely. Now, staying with the UAE, of course, a lot of people have a vested interest in this, and certainly it's something that a lot of people, not just in the region but globally, are looking at, is the impact on the real estate market. Now, from a project's perspective, a construction momentum perspective, you can see here from the graph that projects in the real estate residential sector are still being made. We can see $1.6 billion worth of work awarded in March. We can see $2.45 billion awarded in April. On the right-hand side, you can see a list of some of the projects awarded. So work is still continuing. I know, Colin, you've got some data also that's, I think, quite interesting. But before I turn to you, just also from a licenses perspective, not only is work being continued to be awarded, but we've also got a number of, in terms of new projects being licensed for sales and marketing. You can see here 29 new licenses issued by ARERA in March and 28 in April. So projects are still coming to the market for sales and marketing, which it seems to suggest that the market is trying to move as much as ahead as much as possible as normal. But again, it'll be interesting to see over time what the data says as the year goes on. Colin, you got some data?
Yes, I received an email this morning which was from Cavendish Maxwell, and they were just talking about some of the sales figures for this year. So in terms of overall, there was 57,300 between January and April, with transactions for off-plan rising 3.3% year on year. I mean, that's interesting, but I think what we're really interested in is post February 28th of February, because we want to know what the impact of the war is. So in terms of off-plan, there was 42,500 for those 4 months. but that includes 10,231 in April, which was 74% of all sales. And basically that's showing that April held up okay in terms of an off-plan sales figure. And in terms of total transactions for April, it was sitting at 13,082, which was an increase on the March figure of 12,889. So still transactions going on in the marketplace, and looking at that, the impact of the conflict hasn't been substantial yet. I guess the question we then have, and like we were discussing at the very beginning, we're not really sure what the data is showing us at the moment, and whether there's a time lag effect of people's decision making or the way numbers are collated. We'll have to wait and see in terms of the full impact. But at the moment, it looks like it's those numbers suggest things are okay.
And we're keen to hear your thoughts and feedback and your views as well. So, if you've got anything you think would be worth mentioning, please put it into the comment box. We'll be glad to hear your views and your points, whether you agree, disagree, knowing what you're seeing. So please, along with any questions you might have, put in your thoughts and views into the comment box. We'd be very happy to hear them and maybe discuss them as well. Coming to the end of the presentation now, but looking at the insurance aspect, because obviously some of the facilities that will have been damaged or attacked over the last couple of months will have been covered by insurance. Now we're looking at something called war insurance, or war risk, or political violence and terrorism, abbreviated as PVT insurance, for some of these facilities. And we've been doing some digging around, speaking to companies, insurers, looking at what the situation was, what projects or facilities for it. And the consensus generally is that assets and facilities owned by national oil companies, the Aramcos, the Qatar Energies, the ADNOCs, etc., do tend to have a PVT insurance for events like this. However, the insurance doesn't normally cover the entire asset value, simply because those asset values run into the billions of dollars, and insurers normally have a sort of exposure limit of up to $500 million. So a lot of the facilities from national oil companies will have been insured, and therefore the insurance firm will pay or part pay for the repair of these facilities. However, a lot of the facilities owned by the private companies or smaller companies or non-national oil companies may not have had PVT insurance, and therefore are exposed to the full value of the damage and will not be covered for the repairs of such facilities. So this is something that I think that is going to become increasingly apparent or clear over the next few months as these tenders are issued for the repairs of the work. But typically, insurance payouts will take time, over up to 24 months. Cost damage assessments have to be made. Cost estimates have to be done before the insurance companies start paying out. Nonetheless, it's clear that not all of the damage will have to be borne by the states or the companies involved. Some of them will be covered by insurance firms, and there is enough liquidity in the insurance market for that to be covered. So that's something that we'll be continuing to work on, and to understand how exactly procurement is going to be implemented for facilities which are covered by insurance, and the role that the insurers will play in selecting or the contractors to fix the projects, or in the procurement process generally. All right, second poll question of the day before we finish. What approximate cost increases have you seen as a result of the crisis, i.e. increases in contract material prices, equipment prices, labor prices, overall project development costs? Eager to hear your views on that, please. You should see the poll in front of you. So if you can answer that, that would be much appreciated. Then we can go over the results. As I said, while you're waiting, please enter any questions you might have for me and Colin. And also, if you've got any views, opinions, comments, please put them in as well. Eager to hear them. Okay, so we have more than 50 responses so far in the poll box. And 8% of you say you haven't seen any increases. So very few of you. 36% of you, 39% of you are now saying you've seen increases in costs between 1 and 10%. 35% of you saying between 11 and 20%, and 20% of you saying more than 20% increases in costs. Wow, so that's pretty meaty increases. I can see some comments here. Someone saying logistics costs have gone up between 3 and 5 times. I've heard of companies saying that their shipping costs have gone up tremendously. Insurance costs have gone up. What are you hearing, Colin?
Yeah, similar. In a lot of these cost implications are things that are starting to feed through into the economy. You notice it as a general consumer if you go into the supermarket, and you notice it as a business if you're procuring items. It's the supply chain has held up well. There's been it's proved to be resilient, but at the same time, it's under stress, and you're seeing that in terms of the pricing.
Yeah, and of course, could go up more, or could suddenly go down just as easily. Right. Final slide, Colin.
Yeah, a couple of stories which I thought I'd just highlight. Just in terms of sign of things to come, we're trying really to try and pick out what the long-term trends are going to be. And perhaps an obvious one, an aircraft deal signed by the UAE for military aircraft. I think obviously we're going to see a lot of defence spending over the next few years, and I think this is just the beginning of a lot more defence deals that will be signed. Obviously, there's defence facilities and equipment that's been damaged during the conflict, which will need to be repaired or replaced. And then I think the defence systems will need to be beefed up and made even stronger than what they are at the moment. So I expect a lot of spending into defence over the next few years. And then a more interesting one in terms of sort of broader economy. There was commentary from Brookfield at an event in the US saying that they're looking to double down on their investments in the Gulf. I mean, Brookfield are one of the largest asset manager and investment firms in the world, with investments across a wide range of sectors. In the Gulf, people will know that they're involved with Mirex at the La Mer. Obviously, there's ICD Brookfield Place in DIFC, where they've invested in pipelines. Recently, they signed a deal in Qatar for data centers. So really spanning a number of sectors in the region. And interestingly, Bruce Flatt was in the region last month and met with senior leadership in Abu Dhabi and in Dubai. And the statements were quite interesting, the usual statement about a meeting, but in those meetings it said that they discussed upcoming opportunities. And in the interview he gave at the beginning of this week in the US, said that he's been presented with opportunities in the Gulf. And he said something along the lines of, opportunities that are presented when other people are sitting back are normally the best opportunities. So you're seeing a very large international organization there, seeing some investment opportunities in the Gulf at the moment, which hopefully is the sign of things to come going forward. And perhaps there's been deals discussed and done already, and we're going to see the impact of them in the near future.
Yeah, absolutely. Very, very much hope so. And indeed, the bullishness about the region's long-term prospects is something that I've found very interesting since the conflict started. There's still a lot of optimism. There's still a lot of expectation that the region is going to bounce back. I think that's a very positive sign.
Yeah, I mean, he was his comments. He was saying that he expects the region to build back stronger, and there's a lot of people that will echo that sentiment.
Absolutely. Okay, so if you want a copy of this presentation, please scan the QR code here. Provide your email address, and we'll be sending that across to you ASAP. And just reminder, if you can, if you've got any questions, Colin and I will now take them. And first question here is which segment of the markets look positive? Segment of the markets or projects market looks positive due to the current conflict. You mentioned ports infrastructure. Any other specific segments you can think of? Well, I've gone through this, I think, in a couple of these sessions, but I think ports, of course, railways and metros. Railways for sure, because of the need, I think, to improve inter-country, inter-regional freight links. So I fully expect the GCC railway links to accelerate as a result of this. And I think that's one of the most obvious winners from this conflict is that railway, cross-country railway interconnectivity. And I think also oil pipelines, oil and gas pipelines, as we talked about, oil storage, water storage too. Colin, any other segments you think are going to get a boost as a result of this war?
As I said, I think some of the focus is going to be on local infrastructure. I think there's an opportunity there to try and get ahead of the game in some areas where there's been a bit of pressure over recent years. I think just on the overland transport piece, I think, yes, you're absolutely right. In the economic base case, I think the challenge that the region needs to overcome in the next couple of years is trying to get those cross-border connections, and that applies to pipelines and rail, and to a lesser extent road. And they're going to be the hurdles that if we want to build a much stronger, resilient GCC, that they'll need to get over.
Yeah, absolutely. And I think is this conflict going to also accelerate investment, not just regionally, but globally in renewables? I think.
It's interesting. I mean, we did a cover story last month on whether this conflict is something is going to have an impact in the way the 1973, 1974 oil crisis did. And that led to things like North Sea oil and the start of people talking about the end of oil and what to do without oil. And I think we probably are going to see that sort of dramatic change in the long term. We're not going to notice it immediately, but already we're seeing some sort of demand destruction type behavior in international markets. And I think undoubtedly in 20 years' time, we'll look back on this event as the start of a more sweeping change across energy markets.
Which leads me to a question previously asked earlier about prospects for hydrogen energy as a result of this. Do you think we might see more hydrogen projects emerging as people look to reduce their exposure to oil and gas, or is it still the fact that you've got hydrogen coming from the region?
Yeah, I mean, in some ways that's got the same problem in terms of the supply reliability point of view. I think the interesting thing on hydrogen is we had the sort of period of hydrogen hype, didn't we? For a few years, we had a lot of projects being announced. Not really entirely sure what the economic basis of some of them were. So to go back to your question, will we see more hydrogen projects? I don't think we will. But I think there will be the desire to do hydrogen will continue. And I think the things that are launched now are more likely to go ahead than the things before. I think before there was a bit of a hit and hope type policy, wasn't there? Whereas now, if something is announced and launched, I think the likelihood of it moving ahead is greater than it has been in the past.
Very much so. Question here. Will the conflict affect the healthcare system in the region, including research and development, R&D for new pharmaceutical developments? Very interesting because yesterday I actually was moderating a panel of senior healthcare sector leaders in Abu Dhabi at the Make It in the Emirates event, and we were talking about supply chain resilience within the context of the situation currently. And it's clear that just as with food and other construction materials, and indeed anything that's imported, the region needs to develop also pharmaceutical production capacity and hospital tools and surgical equipment and so on as well. Especially on the drug side, right?
Yeah, I mean, these are obviously essential items for the people that need them. Hopefully on your day-to-day life, you're not dependent on surgical equipment and some of the medical things. But if you do need them, then they're absolutely essential. And it's I think the messaging that's come out from the government in terms of the priorities for supply chain are food and medical supplies. So that means, that shows how important medicine and pharmaceuticals are for the region.
I think one of the things that this conflict has certainly solidified is thinking around in dependency or self-dependence on a lot of the critical products and equipment and materials that are essential for day-to-day life here and business in the region. And it's not the first time the region has come under stress like this. Things like the embargo on Qatar, the COVID situation, has actually created an ecosystem where there has been a greater push over the years to become more independent on these products. So the region, the fact that the shelves are still full of food, that the pharmaceutical industry is still performing, the fact that construction is still ongoing it's fair to say is a reflection of the efforts made over the last few years in securing those supply chains.
Yeah, I mean, an interesting hypothetical conversation would be what would have happened 15 years ago had we been in a situation like this. And I think, unfortunately, we would have found that the air defences would not have been as robust. And the supply chains wouldn't have been as strong as they have been. And I think that really speaks to the work that's been done over the last 15 years. And it's work that really until 2 months ago is work that almost goes unnoticed. You only notice it's there and when it's needed. And the last couple of months we have noticed it's there. But I think 15 years ago we'd be having very different conversations to what we're having today.
Yeah. No, I think credit where credit is due. The region has proven its with its supply chains, it's been pretty resilient. It could have been a whole lot worse. And I can think of many countries. I mean, we're both from the UK. I mean, would the UK have been able to, with things like food and other materials? I mean, it would have been maybe a worse situation.
Yeah, I mean, we saw headlines during COVID, didn't we? Where supply chains were tested. So yeah, it's something that you don't really notice until it's stress tested.
Okay, so hour's up. Thank you all very much for your comments and questions and for sticking with us during what was some tricky technical challenges. We'll try to make sure that doesn't happen again. I hope you found it useful and valuable. Of course, the recording the presentation has been recorded and will be uploaded to YouTube immediately, so you'll be able to watch it again or share a link to it. And of course, fill in that QR code, photo that QR code, and fill in the form, and we'll send you a copy of the deck as well. So from me and from Colin Foreman, thank you very much for joining us today. And we look forward to our next webinar very soon. Thank you.